Welcome back to From Corporate to Cashflow. We are Andrea Cannon and Liz Schwab, two pharmacists navigating the process of building time and financial freedom through real estate investing and lending while working our day jobs. Navigating the journey is difficult, but our podcast guests are experts in showing us how it's done. And today we have Austin Hastings joining us today. Thanks so much, Austin, for joining us.
Yes, thank you so much for having me.
Yeah, super excited to get to know you a little bit more, Austin. So it sounds like you have a W-2 and are doing real estate lending as well, which is obviously very similar to both Andrea and myself, and I think a lot of the individuals that will be listening or watching to this episode. So I think this will be extremely relevant. So very excited to basically power ask you 1,000 questions. So let's get into it. So, tell me a
Absolutely.
little bit about your background, I guess your journey, what you're focused on in real estate, and how did you really get there and decide like that's what you wanted to do?
Yeah, great question. So I come from a background of digital marketing. That's what I do for my full-time career. I'm a regional manager for a big firm all across country, but I manage basically all of Utah, and we are growing. So we're doing a lot of great things, helping a lot of contractors, dental offices, law firms with their marketing presence. But I've always had a passion for real estate. I enjoy, when others say their hobby is swimming or hiking, my hobby is learning. I have been diving in for the past few years now. I've been diving into a lot of real estate info. Influencers out there online. Came across Pace Morby, of course, and Sub2 community, and just really, really loved what they were doing, the creative structuring, and so that was my initial introduction to real estate was creative finance. I originally was kind of looking at gap lending and transactional lending, but then was stars kind of aligned in a way where I was able to get partnered up with a guy who's been doing first position lending, so hard money lending and private money lending for a long time, and we got chit chatting and were able to do a partnership, and so I have been doing that for about a year and a half now. I've been doing a lot of first position loans for fix and flips, bridge loans, DSCR loans, new build construction, refinance, 30-year term, you name it. I mean, we've been doing quite a bit of work here and across the country, which has been really, really exciting. So a little bit
Okay.
about me. Yeah.
Wow, that is a lot. Okay. So you said you have a partner, is that correct?
I do. Yeah. Yep. So he's been in this game a lot longer than I have. And the one thing I really appreciate about Rick is he's always in scale mode. He's always looking to scale and grow. And so he was kind enough to educate me, into this space and to walk me through, the proper underwriting, steps and documentation needed to obviously work loans. And, so I'm very grateful for him. And in return, we've been able to scale and grow each other's businesses, at a fast pace. So
Yeah, no, that's awesome. It's you already answered one of my questions because I was going to ask, do you only lend in the state that you live in, which is Utah? But it sounds like that's you lend across the U.S. Is that correct?
yeah, you're absolutely right. I mean, there are two states currently that we're still waiting on getting our licensing on, but so Nevada is one we're super close of getting, and Hawaii, we haven't done much in Hawaii for a long time, so we'll probably continue to avoid Hawaii since it's a little different structure out there. But yeah,
Mhm.
pretty much everywhere else it's all free game.
Yeah. So one thing that I'm always super interested in and understanding how people develop their skills is in underwriting.
Mhm.
Um, and so I was wondering if maybe you can expand a little bit on that, if your partner was helping you understand that, or like how do
Mhm.
you ensure that you're underwriting correctly for a place that you don't live and you're not familiar with like those randoms. Oh, well, this street's good, but the next street's bad. And then the next street's good,
Yeah.
just things that you wouldn't know unless you like actually physically lived there.
Yeah, so it's definitely a learning curve. Am I perfect at it? No. I still lean on one of his underwriting head employees there, and so I'm still learning. But underwriting is definitely a key critical component to lending. The things that for those who are probably starting or wanting to get started into this space, there's always going to be a learning curve everywhere you go, and underwriting is a huge piece of that. But you definitely want to do your due diligence. Some of the things that we focus on are, we definitely want to have a full inspection appraisal, have somebody out there on boots on the ground on the property, do a full inspection and do an appraisal. That really helps us solidify, the numbers that they're giving us in terms of the deal. We want to, obviously do some background checks. That's a key component. If you're wanting to get into lending, you want to make sure these people are, um, you know, organized. They're not, they don't have, bad history, don't have bad
Hmm.
credit, late payments, things like that. You'll be surprised what a lot of people try to hide. And so definitely do some due diligence there. But yeah, really just, go through all documents, go through liquidity checks, make sure you're getting a non-occupancy document in place, make sure that you're protecting yourself and the lending, of course, and working directly with title and making sure the insurance and everything's there. uh, you know More so for all these fix and flips that we've been doing, you want to make sure that they have coverage for you know potential situations.
Right.
Yeah, like I said, I mean, I'm not 100% perfect with it. I'll be the first to admit. I feel like there's always going to be things that are coming through underwriting that you want to check and verify, but you definitely want to have the basics ironed out. You want to make sure that people are who they say they are, their credit is what they say it is, and the liquidity that they claim they have is there, because you could find yourself in a bad spot at the end of the day.
Right, right. And curious too, I know some people have different profiles of the types of borrowers that they like to work with,
Mhm.
meaning, hey, if they do this, I'll work with them, but if they act like this, definitely won't. Or maybe I want monthly payments, or I want the balloon payment, or I want this level of communication. Do you have a certain profile of a borrower that you're like, yes, this is like my ideal type of person that I would like to work
Yeah.
with?
Yeah, um, I've entertained a lot of different terms with different people and their structures on deals. The people that I enjoy the most are the ones who are quick to agree to the terms, with interest, and I don't really necessarily do anything creative. I'm more old school, like my partner. We don't do any kind of balloon structuring or anything like that, but um, and honestly, we do it in a way to protect them as well. I'm actually working on this. Is I just this morning, actually, there was a person that reached out to me. They sent over a contract. It's looks like it's coming from a wholesaler, and we caught the wholesaler was sneaking quite a bit of of a gap between their
Mm,
purchase and the purchase of our borrower, and so we were able to discuss that and help them out. We also a year ago found, not to you know put shame on anyone, but there are some wholesalers that are out for blood. Um, there was one where they were trying to sneak in $150,000 on just a single family property. Yeah, and it we want to protect our people as much as we can,
mm,
and it's I think it just comes with trust. If we're trying to help them as best as we can. I've turned business away from people because the deal's so thin. I would rather, get them into something different that has a little bit more meat on the bone.
mhm.
But yeah, in a nutshell, we're just here to help serve people and help them grow their business, but do it in a I guess safe manner, or safer manner, because there's always
Yeah.
real estate. But yes, we definitely want to be a second, bird's eye view.
Yeah, absolutely. And like obviously lending and everything that we've just talked about is
Mhm.
very different than your regular W-2 job.
Oh
So
yeah.
everyone has their different reasons for why we invest in real estate or go down that path. But what inspired you to start making that decision to look more into lending and to pursue it further?
That is a great question. I love. There's so many different things you can do with real estate. With creative finance or creative deal structuring, subject to, gap funding. I just really liked this side of it. and to be fully honest, I've I chose this path because when it comes to real estate, people go to those who have the funds to get the deals, and I wanted to be more on that end. I wanted to be on that end to help scale and grow someone's business by being that source of capital, um, and to help them scale and grow. And so I did choose this path. It was definitely a learning curve. Like you totally nailed it on the head. Like, how does one go from digital to lending? I mean, it's an apples and orange thing.
Mm.
But it's been a fun journey for the year and a half so far, and a lot of mistakes along the way, a lot of learning moments. But it has been something I've been really passionate about.
Yeah. And just curious, do you own property as well, like rental properties or investment properties?
Soon, very soon. Yep, I'm working on
Okay.
some stuff with other borrowers that have been doing things with us, and yeah, we're structuring some partnerships and going to be doing some equity deals soon. So
Very
yeah,
nice.
very exciting. We also have some fun things coming down the line, possibly with some golf brands looking to do some big condos and hotels and things like that. So, yeah, it's scaling and growing. I'd say start somewhere and then work your way up. But yeah, we are very soon going to be start working into some owning, having ownership on some of these projects.
Yeah, and I asked that because I was just curious. I very quickly decided I wanted to lend versus being a landlord. And
Yeah,
so I was curious because I wanted to hear your experience, but I'll be interested to see kind of
yeah.
what your thoughts are going forward and
Oh yeah,
like
yeah.
comparing and contrasting the two different opportunities. Yeah.
Yeah, 100%. Yeah, I'm an implant to Utah. I'll admit I've only been here for 2 years, maybe 2.5 years now. So my wife and I didn't really know where we wanted to live, um, what would be a good place for us, and so we are still in a renting space. So I'm on the other end. I'm paying for somebody's mortgage right now, which I hate. But so I see both sides. But yes, very soon, things are going to be changing for us. We're pretty excited for that.
Yeah, there's a season for everything though, and I think renting has a really good place where you guys are trying to figure out where you fit in the state and what makes the most
Right.
sense, and with you being a regional manager, like maybe it makes sense to be kind of in the middle of all the action, or maybe you
Yeah.
want to avoid it altogether, right? Like it's nice for you to have that time to figure that out. And sometimes landlords get a
Yeah.
bad rep, but like people need to rent to figure out where they want to live. I mean, I think that's
Yeah.
reasonable.
Yeah. We didn't want to rush anything and get stuck somewhere where we didn't like. And so, yeah, we're taking our sweet time, of course. And I'm sure at some point an opportunity will come up where we can get into something. Ideally, it'd be fun to get into something creatively, with like a subject too. That would be fun. But yeah, for now we're just kind of enjoying different parts of the city. We go and do a bunch of drives with our kids and really get a good feel for the landscape and the areas. And I think Andrea, you're right. I mean, I think honestly, kind of where we're leaning is being right in that middle ground.
Yeah.
Sandy Draper, maybe I don't know. West Jordan is kind of a little bit further out there, but yeah, we're still kind of playing with it, trying to decide where we want to be. So
I love that. Yeah, no, that's great. So, a lending question for you.
yeah.
There's hard money lending and
Mhm.
there's private money lending, and both can be in first position, but some licensing is required, some isn't, in some
Yeah.
places. I just want to understand what is the difference between the two, and then which one are you, or are you both?
Yeah, so I say we're both, but we're more leaning on hard money. We're, more on the institutional side where we are doing our background checks, going through more documents. Private money lending is, I like to look at it as somebody like an uncle or a parent or a family friend that has the capital, and you're able to bypass a lot of those checks, those background checks, and those documents. So it is definitely an easier path to go through, but it's a lot more challenging. Could be giving up quite a bit of equity on a private money lending deal, a little bit harder, terms or something. Whereas institutional, we love to be in that space because most banks will not touch the stuff that most of our fix and flippers are doing. It doesn't quite reach the you know the it doesn't it doesn't hit all their boxes per se, and so but we see the value, we see the opportunity, and so people come to us, and we try to be as competitive as we can, of course, on our rates. But yeah, we there is a little bit of a difference in terms of paperwork versus kind of getting something quick and going fast. So
Yeah. And so I think probably most people are familiar with just a traditional mortgage lender that gets you the primary mortgage on your first house or your second house, maybe
mhm.
gets you a HELOC if you want to take out a line of credit against your home
Right.
equity. But what types of loan products do you offer?
Yeah, so that's a great question. So right now we're seeing a lot of fix and flip loans. We're working on some new build construction projects, so we do new build loans. We are working on some DSCR loans as well, and we're also doing some bridge loans. So people who are purchasing a property, putting in some renovation into it, and then holding on to it for 30 years. So kind of like a combo between the two. They're more so using it as a short-term loan to do all the renovation work, then they'll turn it into a long-term 30-year for like a hold, for a rental property. So yeah, I mean, there's a lot of different things that we're doing. Um, we're also working on one that's actually quite challenging. I'm curious to see if we're going to do it, but we're trying to do a company or person's trying to assume um, a mortgage from somebody else, and so we're trying to get into creative space to see if we can help them. But it's been a little hard. We're just trying to get some more documents to make sure it happens. But for the most part, we stick to those four things. Fix and flip, new build, DSCR, and bridge.
Gotcha. So if somebody has a property that they want to do a short term rental, a co living, a midterm rental, a sober living, any of these like kind of weird strategies, I don't want to call them
Mhm.
like weird, but that aren't necessarily the traditional long term rental, is there a product out there that you can help them with, or is that not really your wheelhouse?
No, we definitely help with them. In fact, we work with several people who have done, I believe it's called pad splits. Um, I think that's very similar to what you were talking about, like co-living things, right? And yeah, we help them as long as it fits the numbers and the cash on cash return is there and it makes sense. Of course, we'll work with it and entertain it. So yeah, we've only seen a couple of those though, just a few.
Gotcha. Not all lenders are loaning on those right now. So that's why I was kind of unsure.
Hmm.
Um, and that's definitely a gap right now because not everybody even understands that as an exit strategy. So
Right.
just for anyone who's listening to this, pad split is kind of like the Airbnb of co-living or rent by the room strategy. So it's the like name brand version of it, but just like how you can short-term rent your property without actually listing it on Airbnb, this is kind of a similar process to that. But because it's a newer strategy and because it's not necessarily the traditional long term rental, not everyone or not all loan products are willing to loan on that, just like not all loan products are willing to base off of Airbnb projected income and that sort of thing.
Right. Yeah. Yeah. It just really depends on the deal. But yeah, if the numbers make sense, we'll definitely pursue it. So
No, that's super helpful to
yeah.
understand. Have you had any deals go poorly? I don't know if I'm allowed to ask that question, so feel free to say you plead the fifth if that's not something you want to share. But
No, I'm happy to answer this because it's important. Yes, you are going to have deals that come your way that look great, but smell awful. And so it just, like I said, going back to underwriting, you really have to do, your due diligence, ask questions, get documents, really, really find try to find everything wrong with it before you land on it. And so, yes, I think I mentioned this before, but I've turned away so many different deals. We've always, if we don't feel comfortable with it, we don't lend on it. Kind of our motto. Well, it's not really a motto. It's just something we've learned from past, or at least my business partner has learned from past. Is if it doesn't smell good, then he's not going to work on it. But yeah, we've found a lot of that. In fact, there was a local person that we were working with here in Utah. Unfortunately, he's telling me that he did all sorts of fix and flips, over 40 of them. and a young guy. Uh, I ended up partnering with him on the deal. I took his word for it. Okay, this guy knows what he's doing. He's done many of them. We were going to do a multi-million-dollar fix and flip, and we got to the finish line only to find out when it came for credit validation, or sorry, deal verification on all these deals he was claiming, he couldn't produce three. His name wasn't on any of the HUDs, only than three. And so I asked him where these other 37 are. And turns out it was from someone else, and he was just part of the crew to
Oops.
do the
Yeah.
construction. So he was there. He was getting he was getting life experience, but he wasn't getting business experience. It wasn't his name on the HUD. So that threw a wrench into things. It ended up destroying the deal, which we both lost some money. With you got some earnest money and stuff that you have to put into it to kind of hold it and do your due diligence. And yeah, so we lost money on that. So yes, I'll be the first to admit that you have to be careful, because you could get burned real fast.
Yeah, man, sorry that happened. I hate the mistakes that lead to you learning, but it would be nice if we could learn without losing money, right? Like
Oh, 100%. And to those who are listening, like you really have to, you have to start somewhere, but take what people are saying that have done this or have gone down a road, take that and use it, because you can definitely, you know, avoid a lot of the headache and hassle and loss for sure.
Yeah, for sure. So I
Yeah.
want to see your thoughts on something. So I've had a few lenders who say that they no longer want to lend for fix and flips. Obviously, there are a lot of factors that can come into play. Like, do you have good relationships with the contractors? Are you good at the underwriting? Do you understand like
Yeah.
the cost of everything? I just want to see what your feelings were on that general statement of kind of
Yeah.
leaning away from fix and flips now.
It's very interesting. I haven't heard of any lenders who are turning that away. I mean, we love it. We love our fix and flippers, if the deal's right, of course. But yeah, very interesting. I'll tell you what, though. One thing that makes a lender really good, and maybe just an okay lender, is an okay lender will just tell you, hey, yeah, here's my rate and terms. Agree to it or move on. And if you do agree to it, they just kind of do their thing. They get what they need, and then they give you the funds, and you don't hear from them. I guess some people might think that's nice, but a good lender is someone who is networking, getting different people who do different things. Like, for example, you mentioned contractors, right? Like, I know a lot of contractors, and people who are reaching out to me. One in Florida actually is like, "Hey, man, I need some help. I need a contractor." I'm like, "I know this person and this person. Go hit him up. We do all sorts of stuff with this guy. He'll actually even give you a discount on his renovation costs, right, for his construction crew to go in." um, Learn agents, and you know get connected with agents, people who can help you find deals for your fix and flippers. um, Again, I have a partnership with an awesome woman in Florida. Is a killer She is a killer agent. Like, she can find anything for anyone, of numbers that they're looking for. Hey, I'm looking for a purchase price of X with a renovation of Y with a return, an ARV of Z. Within 2-3 days, she'll have it ready, go, and they're in a deal ready to rock and roll. And so, but not only that, she's helping them list it, and then she's helping them find another one to kind of keep them growing. So, yeah, I'd say a good lender versus an okay lender is, network, get connected with a lot of people, send business to other people, because they'll return the favor, rather than
Yeah.
just, a one and done. I'd rather do a 1 times 10 kind of thing down the future.
Yeah, absolutely. I think that's something a lot of people don't think about too, right? Is it makes more sense to maybe have these like a few
Oh yeah,
people that you're consistently lending to rather than having to continuously vet new people over and over and over.
yeah.
So you're right. That makes a ton of sense.
I mean, in a perfect example, we lended on a fix and flip in Washington. They immediately came back with another deal. We got them into another deal. They now have two construction projects going with another fix and flip on the hook. So they are in serious growth mode. And he asked me, "Hey, do you know any gap funders?" Because we've used up a lot of our liquidity on these projects. And so, yeah, I mean, I know people. I'm working him get connected with people as we speak to kind of help get
Hmm.
those deals. But one turned into, what is that? Five now. One's turned into five soon. So I mean, it's crazy what you can do when you connect people with others, for sure.
Right. No, for sure. Networking is so powerful.
Yeah, yeah.
And then I love this question because I love learning what other people have learned. So, for lending specifically, can you tell me something that you now know that you wish you would have known when you first started lending? Because I think this applies to like literally everyone. And sometimes, like, you could be lending for forever and be like, oh, I didn't know that still. So, I love this question.
Yeah, man, that is such a good question. I'm trying to like give you the a really solid answer on that one. I mean, what I didn't know versus what I know now, the I would say the amount of layers of things that underwriting, the stuff that we look at, I never would have thought we would have had to go through so much stuff. I mean, that might scare somebody where it's like, I don't want to provide them, 10 to 14 documents to verify everything in order to get the funds to close this deal. But um, man, like, I see the value, I see the reason why a lender needs to go through and really check everything. And I'm grateful that I've been learning the underwriting and processing world, because it is true. Like, you really want to make sure everything's there. You don't want to get to the end and find out that they have no, capital to go towards, um, you know, the renovation work, and now you're stuck and they're in a bad spot, and then everything just goes bad. Um, I'd say that's probably the biggest thing I've learned is vetting people. Um, and I knew there was going to be vetting involved, of course, going into the lending world, but um, my partner has done this for a long time and has everything structured quite nicely to where we can easily get in and out with all the documents we need, in a short matter of time to fund their projects. But we definitely need to see, certain criteria, of course. But man, that's such a good question. There's so many things I've learned. Um, I've learned different deals, like bridge loans. I didn't really know what a bridge loan was, to be honest, when I started. I didn't even really know what the rates and terms and origination. Like, I didn't really know a lot of terminology, but when you study and learn from others, and you have you've got people that you lean on and want to learn their experience, you can pick up a skill pretty quick, honestly.
Yeah, that's awesome. I mean, there's so many little nuggets in there that I really appreciate you sharing with us. And I mean, I think it's it's really cool because you and I met at a meetup, right? And
Yeah,
so
we did. Yeah.
really cool to actually see how this has gone from you just like not knowing anything, and I mean, I didn't know that much either, right, at that point in time, and
Yeah.
how big of an arc you've had from that time frame to
Oh
where
man. Yeah.
I see somebody like even need a loan or anything like that, I'm like tagging you
Yeah.
in it, like now all the
Yeah.
time, right? So
Yeah.
that's awesome.
Yeah, Andrea, that's funny because yeah, that was like what, a year ago, maybe a little over a year ago when
Yeah,
we
more than a
first
year
met.
ago. Yeah,
I
yeah.
was invited to that meeting because I was talking to one of my coworkers at the time. He was already a sub two member in the Pace Morby group, and I was telling him like, oh man, I know all about it. I've been watching all sorts of videos online, studying Pace. I like his Gator method. And he's like, dude, they're actually Pace is going to be here in Utah. You should come hang out with us. And so I did not know what I wanted to do. I didn't know which direction I wanted to head. I just knew some info to sound cool. And man, I went there and it was so weird. Like, Pace is like, all right, we're not doing this. We're not the structure where we're in church. Like, everyone get up, everyone start mixing, mingling, talking to everybody. And I remember like everyone's like, what do you do? I'm like, I don't know. um, but yeah, it really opened my eyes to the power of meetups and networking, for sure, and it definitely put me on a good trajectory for success. And so I'm really grateful for those meetups. I know they do. In fact, most states will have a real estate investing meetup group or some kind of sort of group, and they're all. That's the beauty of what I do, digital marketing. There's so many things you can do in digital these days, or find out. There's so many groups that are in your backyard you might not even know exist.
Yeah.
And so, yeah, for those of you, again, listening to this, like, really take some time, look into Facebook, look in LinkedIn, find people who are meeting up, regularly, and start networking, start learning about what it is they're doing, their needs, their wants, and try to be, a key to help them unlock that next level.
Yeah, no, that's so super helpful. And thinking about you just balancing everything that you're balancing with your, marketing in the digital space, and
Mm-hmm.
this lending venture, which just seems astronomical. With how much, the volume you guys are doing and the types of loans and everything like that. I mean, it's
Yeah.
just super impressive. So, have you developed any habits or routines that you have utilized to really help you stay on track with your goals?
Yeah. I'll say this because, people who are in their W-2 and wanting to do a side business, it's very easy to get your timing between the two mixed. You can get yourself in trouble by doing a lot of stuff during W-2, hours. And so I dedicated, several, hours before work and several hours after work to work on, things that I enjoy outside of work. Obviously, I love what I do. Don't get me wrong. I love doing digital marketing. I love being a part of my team and helping them grow and see their families, enjoy the success of their hard labors. But, there is a time and place. You definitely need to, you know, take care of your family, take care of yourself first. But you can always scale and grow outside of, those business hours. And really, I guess the time that you put in should, give you a good return. As you learn and study and fail and grow. I mean, I say fail because I failed a ton and sounded like an idiot on a lot of phone calls. But yeah, it is challenging. It's tough, especially if you have kids. I got kids too, and so there's times where I'm exhausted at the end of the day working, out in the field in the 100-degree hot weather, and getting home and playing. What are we playing? We like to play horseback, or we like to kids jumping all over me. My boy loves to play, hunting game where I'm the hunter and he's the deer, or like vice versa. And
It's so cute.
like, yeah, we got like a little toy gun for him, and he likes to try to find me. And so we play a lot of hide and seek and stuff. So I love doing that. So you just got to dedicate some time and just know that you can always do something to move the needle, one day at a time. Of course, there's times where I'll start work, in my real estate business, 10, 11 o'clock at night.
Mhm.
You just got to squeeze in when you can. But I know that was a long-winded response, but I'm passionate about what I do for my day job. I love what I do, in real estate. And if you time everything well, you can do things, you can do both quite well. Yeah.
Yeah, and I mean, that really speaks to me and Liz, both of us, because we both really enjoy our jobs, and so it's really trying to find that way to balance both of them, and it
Yeah.
doesn't always look like balance, right? Like sometimes it's like 100% of one thing and 100% of the other, um,
Yeah.
or you're, like you said, burning the candle at 10 p.m. But it is trying to make both things work simultaneously and figuring out the way that makes
Yeah.
it happen, right? Like becoming
Yeah.
Lord for Liz like was not a good fit, right? And then now doing lending for you like is the thing. And people always say like it's the 5 to 9 after your 9 to 5 or before
Mhm.
your 9 to 5 or
Yeah.
both.
Yeah. Yeah. There's times you're at it 5 in the morning until 7:30 before you head to work, and there's times where you're starting at 10. I will add this though, because I think it's important. But if you do decide to start something, right, for those listening, you have to stick with it. You can't master a skill in a month or 2 months time. You have to dedicate yourself to it. Yeah, I had a little tough go. Like, I was trying to network and grow my name out there as to what I do and how I can help. And yeah, it didn't immediately fire off. I wasn't, closing deals and loan. We weren't doing loans immediately. It took some time. You have to know that, and it's another thing too. It's called shiny object syndrome. I'm sure everybody who's listening, or I'm sure us on the call, have had that before. I've definitely had it, where I'm going down a path, it's not going the way I wanted it to, but then something on Instagram catches my eye on somebody making, mountains of money every day, and I'm like, oh, cool, that looks easy. Let me try that now, and it just doesn't happen. So you have to stick to what you're wanting to do, and it will come. It gets easier. You learn a lot more, and you can scale a lot faster. So stay the course.
Yeah, I love that advice. It's so true. And I want to go off of something that you just said, right? Like, oh, that looks easy.
Mhm.
So my question to you is, let's say there's another individual listening, watching, and they have a full-time W-2, but they do want to start getting into lending for real
Yeah,
estate. And maybe
yeah,
they listen to this and like, oh, wait, it's not as easy as I thought it was. What piece of advice would you give them for becoming interested or starting the process of loaning their money? Like, where do they need to start?
yeah. For those who are wanting to start, and oh, good question. I mean, for me, when I was going to these meetups, people were like, "Oh, what do you do?" "Oh, I'm a lender." "Cool. What are your rates and terms and this and this?" And I was just like deer in the headlights. I didn't know, because like my partner had all those answers. I was just there to see if anyone was interested, and so for anybody listening, if you know somebody who is doing lending, or if you want to reach out to any of us who's been doing it now for some time, knowledge is power. Lean on them. Say, hey, I had this interesting question. Some guy asked me if they could do this or that. What are your thoughts? Um, People with experience can coach you, and you can learn a lot more quickly than if you were to try to learn it yourself. And obviously you won't get burned as much if you lean on. So, for example, when I first initially started, I was getting hit with all sorts of questions about lending. I didn't even know were even a thing with terminology. I thought it was Chinese. And I called my partner. I'm like, I don't know what they're saying, what they're talking about. Like, can we get on a group chat? Can we get on a group conference call? I just want to hear the conversation. I want to know what's going on. So, and I was the first to admit to people like, hey, look, yes, I do lending, but my partner's got a lot more of the experience. I'm more so, with him to help scale and grow. Um, and people like that. I didn't want to come across as like I'm Mr. Know-it-all. Let's get into a deal and I'll fake it to make it. No, I made sure that people were aware that I was, kind of a greenie in this space. And but my partner has done a million of these, and let's get everybody in. Let's start talking about it. And then I just learned from there, what a lot of those things meant, or after a conference call, I'd call my partner back and be like, what the heck did they just say? What was that all about? Like, I have no idea what you guys are talking about. And so find somebody who is passionate about it and is knowledgeable about it, and just keep picking their brain, you know?
Yeah, I can super appreciate that. And I get the whole like fake it till you make it for like some things, but maybe when you're borrowing someone's money, you probably shouldn't be faking it till you
Don't
make
do
it.
that.
So I appreciate you being like honest and upfront with like what you know, what you don't know, and taking the
Oh yeah.
steps to like learn that,
Yeah.
right?
Yeah.
Yeah.
There, like I said, it was a slow progression in my, beginning career here at lending. And it was tough. Like there was, yeah, numerous days where I was like, wow, I suck. Like this is definitely probably not what I was expecting. This was hard. I think I should probably, oh, shiny object, that might be easier. But no, I just stuck with it. And, I learned as I got along. And when you learn something, you get a lot more confident in that piece. And then, people come to you when somebody comes to you and they're asking for just that specific thing. You're like, light bulb, I know what that is now. Let me tell you exactly what we can do here in that space. And you sound more confident, and you can always help them too, of course, um, move the needle. But yeah, it's an awkward thing to do, but it's a necessary evil. You have to practice to be perfect. And I'm
Yeah,
still
for sure.
practicing. I'm not perfect, by the
There you go. We
way.
all are. We all are. And then kind of a weird question, but I am just curious. Is there anything that surprised you about lending?
Uh,
Like you had maybe this preconceived idea in your head, and then the more you did it, you're like, oh, wait, okay, I get it.
Yeah, the biggest thing that surprised me is the background checks. To be honest, people tell you they've got all these great things. They've got credit scores. I mentioned that one individual in Utah told me they did all these deals. Found out not only did he only be a part of three that his name was on, but he didn't have any credit when he told me he had some credit. And so, yeah, I've seen some crazy stuff. I've seen people with, you know, um, fraud with financials, like a lot of different legalities of people who have stolen money before and now they're in the space and they want money again from someone else. Um, I've seen people who have criminal records for like murder and all sorts of crazy stuff. And so um, I'd say the background piece is definitely an eye opener. Like I thought, yeah, this guy's here. He knows what he's doing. He's done a few of these. Why not? I trust him. You'd be surprised what is behind the curtain if you don't do something like that. Um,
Wow.
don't want
Oh
to work with a murderer, right?
my
Somebody
gosh.
who's yeah. It's yeah. You see some crazy stuff.
That's insane. And yeah, I mean, I guess I didn't really think about that entire piece. And I'm not sure, like, I don't think I've ever hit a deal where I've borrowed where they've done a background check that I can think of. Like, I'm wondering maybe, or do you tell people you're doing it? Maybe it's happening and I don't know.
Yeah. So in my loan application, there's a waiver and there's a segment in there that talks about how we can go and do a background check. And we always let them know we're going to do a credit check on them as well. And so, um, excuse me. But yeah, that's so they do see it coming. And then, of course, from there, we'll be like, hey, uh, you forgot to tell me you pretty much killed somebody. What makes you think I want to give you money? And because if you're mad at me, I don't want you to come knock on my house. So yeah,
Oh
it's
my
that.
God.
That's probably the biggest thing I've seen is the background checks, um, and it's easy for somebody to get desperate, somebody who's on the hook. They've got a closing date coming soon, they need money, and they'll say whatever it takes to get somebody to join them, and it could go south real quick. So yeah, you just want to take your time and really go through it. And when I say take my time, it's not like it's taking me months to lend on a project. On a fix and flip, we can lend as quickly as 7 days as long as we're able to verify and check everything pretty quick. But 7 to 10 days is a fast turnaround, I think. But there are times where if something doesn't look right, we want to look into a little bit more, especially if people moving funds around to say that they have
Mm,
capital, and then we're like, well, this just literally hit your bank 3 days ago, and it came from this account. We need to know who that account was, and then we kind of start finding out that we're tracing funds from all sorts of things. It's really fishy. So you want to make sure you do your due diligence.
yeah, absolutely. Man, this has been so interesting because we have talked to private money lenders before, which obviously you guys do some of that, but we haven't talked to as
Mhm.
many hard money lenders. And so this is just really
Yeah,
fascinating to learn.
yeah. I love private money. I think it's a great resource to have in your back pocket if you are working and doing a lot of deals. But it's challenging. I know there's a lot out there, but yeah, you really have to. I mean, I like to think private money is you have to like and trust that person and know them well enough to give them all that funding. And it's tough, if I was to come to somebody I've never met and ask for, $500,000 um, to work on something. I just, I would be scratching my head if they just gave it to me. Honestly, I'd be nervous about it because I'd like to think somebody would do their homework on me before giving me that much, responsibility. Unless if they have some like serious terms or legalities that are just gonna destroy me if anything goes wrong. So I guess you got to do your due diligence on both sides.
Yeah, absolutely. Absolutely.
Yeah.
Well, um, kind of transitioning away from just the talk about money and want to hear, a little bit focused more on your lifestyle. If you have any upcoming bucket list adventures or travels that you have planned in your future.
Yeah, so funny you say that. In about 5 weeks, we are expecting our third child. So, yeah, we have a boy, a girl, and we're going to have another boy. So, very exciting.
Gosh.
So that is the next adventure. Is in a few weeks' time. We'll be able to see our sweet little boy, and the name is yet to be determined. We have no idea what we're going to name this one. So, uh, I guess I'll get back to you guys on what we do there. But yeah, so that is the most exciting piece for us on our end right now. But we do love to travel. My wife and I love going everywhere. I mean, we've traveled quite a bit this year already, and I'm looking to get her into. I think we talked about this before, but I'd love to take her to Africa one of these times. I served a mission for my church in France, and so I'd love to take her back to France and take a tour of all of southern France where I served. Also, some a little chunk of Switzerland. My brother served in northern Italy, so
Oh my
we're
gosh.
thinking of like taking my parents and my brother and his wife. We're gonna start somewhere in Italy and do a little tour all through Italy, see his mission, and then we're gonna dip into Switzerland, then start going through my mission. So we've been noodling some ideas to do that. So I'm hoping soon my wife and I can go, but a little challenging when you have little kids. So we're trying to figure it all out. But
Yeah. Well,
part of life. That's the fun and excitement. A lot of horseback rides from dad, and Lego building and hunting in our house for dad is way fun. So we enjoy it all. That's really our hobby, is what the kids enjoy doing. A lot of bounce houses. It's a lot of fun.
that's awesome. And I mean, that is a big, big adventure upcoming with a new little one.
Yeah, we're so excited. Yeah,
Yeah, it's
it's gonna be amazing, and we're trying to get as much sleep as we can.
how old are your other two kids right now?
So my son is going to be turning 5 in just a couple months,
Yeah.
and my daughter just turned 3.
Oh, wow. Oh,
Yeah,
man.
yeah,
Awesome. That's so cool. And now you'll be moving to, what do they say, zone defense instead of man to man, right?
yeah. We're zoned now, and we're going to get quite good at it. My son is man, he's constantly going. So yeah, we should have a good zone defense.
So, if people want to follow up with you and hear what you named your son, or if they would like to work with you, connect with you, what is the best way that they can get in contact with you?
Yeah, I love social media. Social media is a great place to connect with people. Start there. Reach out to me on Facebook. Send me a DM. Send me a like or follow, and I'd love to follow you back and learn about what you're doing. Hit me up, call me. I love people who DM me and ask for questions. I always send them my cell phone number. So reach out to me, and we'll get you guys in hopefully a head start to your lending opportunities, your lending business. And I just really appreciate you, Andrea and Liz. I mean, you guys are so phenomenal at what you do. I don't know if you guys know this, but Andrea, Liz, I know we've only met just for a brief while, but I've known Andrea a little bit longer, but she will take the shirt off her back for anyone, and I'm sure you would too, Liz. But they are so incredible. Andrea was actually one of the people I talked to the night I was still trying to decide what to do. I got invited to that meeting. That was my first real estate, meetup, and I was nervous. I didn't know what to expect, what to do, but Andrew really took time to listen to me and genuinely wanted to help me, and we've been in touch ever since. And so I really appreciate you and your friendship. You guys, friends and partners is key to this. Make sure you surround yourself with others who are doing it and are willing to share. You will go a long ways.
I really appreciate that. Thank you so much. And like I
Yeah.
said, it's been so cool to see your trajectory. And I mean,
Oh,
that
thank you.
is such,
Yeah.
it's so cool. You're on here now and you're telling us all about your hard money lending that you're doing. And that was back from before when you didn't really know what your journey
Deer in
was,
the
your plan.
headlights. Yeah.
Wow.
Yeah,
That's
it's been so fun, and we're really excited for what holds in the future, and really excited for you guys, listening to the call. We really care about you. We want you. Obviously, they care enough that they're doing this for you. So really make sure that you take that course of action.
Oh, we really appreciate that, Austin. And thank you so much for your time. I feel like we have learned so much from you today. And once again, just watching your journey has been absolutely incredible. And I'm glad we got to tell everybody else about it today. That's been
Of
so cool.
course. Yeah. Thank you so much for having me.
Yeah, absolutely. And thanks everyone who's listening here to this week's episode of From Corporate to Cashflow. We will catch you next week. Hey, it's Andrea. Thanks so much for listening to this episode. If you liked it, I'd love it if you hit subscribe. Thanks so much.